India Grid Trust is the next company in focus. The company has reported a strong third quarter with revenues, profit and as well as EBITDA all doubling compared to last year. Let's discuss the quarter gone by then with Shah, who is the CEO of India Grid Trust. Hi, Mr. Shah. Good afternoon to you and congratulations, by the way, on good set of numbers. Tell us what led to this sort of growth on all the parameters that we are analyzing right now.
Hi, good afternoon. Thanks a lot for having me. I think the key reason why our numbers are doubled is that in quarter two of this financial year, we acquired two large projects on the back of a capital raise, which doubled our market cap as well as our run rate of revenue, EBITDA and PAT. And this is the first quarter when there is a full impact of the entire acquisition that is realizing. And that's the reason it is doubled in this quarter.
So it's on back of new acquisitions that you've done. I remember one concern, I was reading one of the reports, was that the receivable days were going up. If you could tell us what were the receivable days in the quarter gone by versus the September quarter? Was there any improvement on that front?
Sure. So in this quarter, receivable days have increased by just 6 days. Our receivable days were 90 days in quarter two. Right now it is 96. Usually it's a very minor change in the receivable days. And usually the receivable days follow a cycle, and quarter two and quarter four are usually the peak receivable, or rather the best collections and lowest receivable. And we believe that by quarter four, we would catch up with the receivable days to back to 90.
Okay. The street would want to know this, Mr. Shah, as during the quarter, the regulator SEBI has enabled rights issue for InvITs like yours, which looks like a positive regulatory development for a trust. What are your comments on that? And on back of that, can we expect any sort of fundraising to come by in the next financial year?
Sure. So I think, as you rightly picked up, it's a very, very favorable regulation. And over the last 4 quarters, there have been several regulatory changes which are done by SEBI as well as RBI to support InvITs, starting from 70% leverage in quarter four of last year, reducing lot size to 1 lakh from 5 lakh to increase liquidity, and now rights issue. Rights issue per se is a great tool because it enables InvITs to raise capital very efficiently in a transparent manner, provides pricing flexibility, as well as all the existing investors gets right to participate in that capital raise. Considering that InvITs are a platform which are a perpetual growth platform, will keep raising capital and acquiring assets more than a normal company. Rights issue is a very, very efficient tool for us, and we see it as a positive development. At the moment, we are not looking at an immediate capital raise. The reason being that we have just raised about 2,500 capital in May this year, which would enable us to grow from 11,000 crores to about 18,000 crores over next year or so. And if at all we see any assets beyond that, we would have to raise capital and we would come back to the market with that.
Harsh, good afternoon and congrats on a good quarter. Just wondering, is this performance sustainable? And if so, would you reckon that some of the aspects that you've guided to could actually improve? For example, I think for FY20, you said that the dividend per unit would be at about 12 odd rupees. Do you think going ahead, the fundamental performance and thereby some of these metrics could change in FY21? For the better?
Yeah, good question. So I think, most of the P&L and balance sheet metrics will go for the better because we are going to acquire more projects and we have signed exclusive agreement to acquire another 7,500 crores. So that will, as our asset size grows from 11,000 crores to 18,000 crores, certainly the revenue, EBITDA, cash, etc. would grow along with that. Coming to the parameter which you mentioned is the distribution per unit. That is a per unit parameter, and therefore that may not change in the same proportion. And at the end of the day, we would have flexibility to earn more cash, and therefore our ability would increase. However, distribution growth is a decision made by the board as looking at the scenario and the investor expectation. So that is something which we won't be able to comment whether it will improve over a period of time. Having said so, all the other parameters would certainly improve.
Okay, so one last question. Can you leave us with some guidance, Harsh, about how FY20 as year could end with and what kind of rough guesstimate growth projections or growth numbers can one look out for FY21?
Sure. So I think, one is that we have guided the market in the past as well that we have a projection of meeting at 12 rupees a distribution this year, which would mean about 666 crores of distribution coming to investor in FY20. With this quarter being at 3 rupees and 175 crores of distribution, we are on track to achieve that, and we are affirming a guidance for FY20 in Q4. For next year, FY21, at the moment, we are maintaining a guidance at 12 rupees a unit, which is 175 crores a quarter and 700 crores of distribution in a year. As and when the developments happens of acquisition of asset, we would come back with a revised guidance.